Your Social Security check may be smaller every month for reasons you were never clearly told to look for, not because your benefits suddenly disappeared, not because you made a mistake, but because money can be removed from your payment before it ever reaches your bank account, and many retirees do not discover the reason until months or even years later. A Medicare premium, a tax withholding choice you made long ago, an overpayment notice, a debt collection rule, or an income-related charge connected to a tax return from 2 years ago. Each deduction may look small by itself, but when several deductions happen at the same time, they can quietly take hundreds of dollars from a retiree's monthly budget. That is money meant for groceries, prescriptions, utility bills, and the basic costs of living on a fixed income. In this video, I will show you 7 Social Security deductions that every senior should review carefully. Some deductions may be required. Some may be based on your income or Medicare plan. Some may be temporary. And some may be worth questioning, appealing, changing, or reviewing with an official agency before another payment arrives. But stay until the end, because deduction number 7 is one that can surprise retirees after they believe their Social Security amount is already settled, and by the time they notice it, part of their check may already be gone. By the end of this video, you will know exactly where to look, which letters you should never ignore, what questions to ask, and which official office can give you answers based on your own situation. This is not about fear. It is about protecting your retirement income by understanding every dollar that leaves your check. Now, let's begin with deduction number 1, the Medicare cost that can be taken directly from your Social Security payment before you ever see it. Deduction number 1, Medicare Part B premiums. The first deduction is one that millions of retirees see every month, the Medicare Part B premium. For many people, this amount is taken directly out of their Social Security payment before the money reaches the bank. That means your Social Security benefit may look one way on paper, but the deposit you actually receive can be lower because Medicare Part B has already been deducted. This deduction is common, and for many people it is correct, but you should still review it. Why? Because Medicare premiums can change from year to year. Your coverage can change, and in some situations, people with limited income may qualify for help paying Medicare costs through programs offered by their state. Here is what to check. Look at your Social Security payment record or your bank deposit. Then look for the Medicare deduction amount. Ask yourself, is this the amount I expected? Did it change recently? Do I understand why it changed? If you are struggling to afford the premium, contact your state Medicaid office or your state health insurance assistance program, often called SHIP. You can say, I receive Medicare and Social Security. I want to know whether I may qualify for help with my Medicare Part B premium or other Medicare costs. Do not assume you earn too much before you ask. Rules can depend on income, savings, state programs, and your personal situation. And be careful, no legitimate government office will call unexpectedly and demand your Medicare number, bank password, or one-time security code to reduce your premium. If someone calls you out of the blue, hang up and contact Medicare or your state office using an official phone number. Now, the next deduction can make the Medicare Part B premium much higher for some retirees. Deduction number 2, income-related Medicare surcharges. The second deduction is called an income-related monthly adjustment amount, often known as IRMAA. The name sounds complicated, but the idea is simple. If your income was above certain levels 2 years earlier, Medicare may charge you more for Part B and Part D coverage. This can surprise retirees because they may not feel wealthy today. Maybe they are living on a fixed income now. Maybe they stopped working. Maybe their retirement account balance has dropped. But Medicare often looks back at a tax return from 2 years ago. That means one unusually high income year can affect your Medicare premiums later. For example, a retiree may sell a home. They may take a large withdrawal from a retirement account to repair the roof. They may sell investments. They may receive a large bonus during their final working year. They may convert money from a traditional retirement account into a Roth account. Any of these events can increase income on a tax return. Then later, Medicare may use that tax return to calculate a higher premium. The important thing is this: a higher premium is not always permanent. If your income has gone down because of a major life event, you may be able to ask Social Security to review a more recent situation. Examples can include retirement, reduced work, divorce, death of a spouse, loss of income, producing property, or other qualifying life-changing events. Do not assume you can simply call and have the amount changed. There is a formal process, and you may need documents, but you should ask. Contact Social Security and say, "My Medicare premium is based on income from 2 years ago, but my income has changed. I want to know whether I can request a review based on a life-changing event." Keep copies of retirement letters, pay stubs, tax returns, pension documents, or other proof showing what changed. This deduction can be costly, so do not ignore a notice explaining a higher Medicare premium. Read it carefully, check the date, and respond before any deadline passes. Now, the third deduction is one that some retirees chose years ago and then forgot about. Deduction number 3, federal tax withholding. The third deduction is federal income tax withholding from your Social Security benefits. Some retirees choose to have taxes withheld from their monthly Social Security payment. This can be helpful because it spreads tax payments across the year. But problems happen when the withholding choice no longer matches your current life. Maybe you chose withholding when you were still working. Maybe you had a pension, rental income, or investment income at the time. Maybe your spouse was working, but now your income is lower. Or maybe your income is higher because you started taking required withdrawals from a retirement account. Your tax situation can change, but your withholding choice may stay exactly the same. That can create two problems. If too much is withheld, your monthly Social Security deposit is smaller than it needs to be. You may receive a larger tax refund later, but you gave up the use of that money during the year. If too little is withheld, you may face an unexpected tax bill when you file your return. The goal is not always to get a large refund. The goal is to have your withholding match your actual tax situation as closely as possible. You can review or change voluntary withholding by using the appropriate Social Security tax withholding form or by contacting Social Security for instructions. Before making a change, consider speaking with a qualified tax professional. They can help you estimate whether your Social Security benefits may be taxable and how much withholding makes sense for your household. And do not rely on a random online calculator alone. Your pension, retirement withdrawals, dividends, part-time work, marital status, and other income can all matter. Now, the next deduction can be frightening because it often begins after a letter arrives in the mail. Deduction number 4, Social Security, overpayment recovery. The fourth deduction is repayment for a Social Security overpayment. An overpayment happens when Social Security later decides that it paid someone more than they were eligible to receive. This can happen for many reasons. A person may have worked while receiving benefits and earned more than expected. A change in living arrangements may not have been reported quickly. A disability or SSI payment may have continued after a change in eligibility. A spouse, survivor, or family benefit may have been calculated incorrectly, or Social Security itself may make an error. Then, months or even years later, the person may receive a notice saying that money must be paid back. This can be very stressful. The letter may say that Social Security plans to withhold money from future payments until the amount is repaid. But here is what you need to know. Do not ignore the letter. Do not throw it away. And do not assume you have no options. Depending on your situation, you may be able to ask for reconsideration if you believe the overpayment is wrong. You may be able to request a waiver if the overpayment was not your fault and repaying it would create hardship. Or you may be able to request a lower repayment amount if the proposed withholding would make it difficult to pay for basic living expenses. The details matter and deadlines can be short. As soon as you receive an overpayment notice, contact Social Security using the official number on the letter or through your official Social Security account. Ask, "Can you explain why this overpayment happened? What is the deadline to appeal? Can I request a waiver or a lower repayment amount? What documents do I need to show hardship?" Keep copies of every notice, every form, and every record of your conversations. This is one deduction where waiting can make the situation harder. Now, the next deduction may apply if you are still working while receiving Social Security. Deduction number 5, work and earnings-related withholding. The fifth deduction can affect people who claim Social Security before reaching full retirement age and continue working. Social Security has earnings rules for people who receive retirement benefits before full retirement age. If you earn more than the annual limit, Social Security may withhold part of your benefits. This is not a penalty in the way many people think of a penalty. It is a rule connected to claiming benefits early while still earning wages or self-employment income. The exact earnings limit can change each year, so always check the current official amount. But the key point is this: if you are under full retirement age and you plan to work, you should report your expected earnings to Social Security. Do not wait until the end of the year. If you take a new job, receive a raise, work extra hours, or start self-employment, update your estimate. That can help reduce the chance of a surprise overpayment notice later. Here is an example. A retiree begins Social Security at age 63 and plans to work only a few hours each week. Later, the employer asks them to take extra shifts. Their income rises, but they do not tell Social Security. Months later, Social Security may determine that too much was paid and begin withholding future checks. The solution is simple: report changes early. Call Social Security and say, "I am receiving retirement benefits and I am still working. I need to update my expected earnings for this year." Once you reach full retirement age, the earnings limit no longer applies in the same way. But until then, it is important to understand the rule. Now, deduction number 6 can come from a different part of the government. Deduction number 6, Treasury offset for certain debts. The sixth deduction can happen when the federal government collects certain debts through a process often called a Treasury offset. In some situations, part of a federal payment may be withheld to repay qualifying debts. The rules can be complex, and not every debt can be collected in the same way. But examples may include certain federal debts, delinquent taxes, or other debts that qualify under federal collection rules. If you notice an unexpected reduction in your Social Security payment, do not assume the bank made a mistake. Check your payment record, open every notice you receive, and contact the agency listed in the notice to ask what the debt is, how much is owed, and what options may be available. You may have the right to dispute the debt. You may be able to request a payment arrangement, and in some cases, you may be able to show that the withholding creates financial hardship. Never send money to a caller who claims they can stop the government from taking your Social Security. That is a common scam. Government agencies do not demand payment through gift cards, cryptocurrency, wire transfers to strangers, or payment apps. If you receive a suspicious call, hang up and contact the official agency directly. Now, the final deduction is one that many people do not notice until it becomes a serious problem. Deduction number 7, Medicare. Prescription drug, premiums, and late penalties. The 7th deduction can involve Medicare Part D prescription drug coverage. Some people have a separate monthly premium for their prescription drug plan. Depending on how they pay, that amount may be deducted from Social Security. Others may face a late enrollment penalty if they went without creditable prescription drug coverage for too long after becoming eligible. This penalty can continue for as long as a person has Medicare drug coverage. That is why Medicare notices matter. If you are approaching Medicare eligibility, review your prescription drug options before your enrollment period ends. If you already have coverage, check your annual plan notice and make sure you understand any premium changes, deductible changes, or coverage changes. And if you believe you were charged a late enrollment penalty incorrectly, ask Medicare or your drug plan how to request a review. You may need proof that you had other creditable prescription drug coverage during the period in question. Keep letters from former employers, union plans, retiree health plans, or other insurers. Those documents can matter if you need to show that you had qualifying coverage. Your Social Security deduction checklist. Now, here is the simple checklist every senior should use. First, look at your monthly Social Security deposit. Second, compare it with your benefit information and identify every amount that comes out before the money reaches your bank. Third, ask whether each deduction is a Medicare premium, an income-related surcharge, federal tax withholding, an overpayment recovery, work-related withholding, a debt collection offset, or a prescription drug premium or penalty. Then write down any deduction you do not understand. Do not guess. Use official sources. Contact Social Security for benefit deductions, overpayment notices, work rules, and income-related Medicare reviews. Contact Medicare or your plan provider for Part B, Part D, coverage, premiums, and late enrollment questions. Contact the IRS or a qualified tax professional for tax withholding questions. And remember this, understanding a deduction does not always mean it will disappear. Some deductions are required, but understanding the reason can help you spot errors, meet deadlines, ask the right questions, and make better decisions for your retirement budget. Your Social Security payment is too important to leave unexplained. When you look at all 7 deductions together, the message is simple. Your Social Security payment is not just one number. It can be affected by Medicare premiums, income-related charges, tax withholding, overpayment recovery, work-related rules, debt collection, and other deductions connected to your personal situation. And the difficult part is that each deduction can seem small when you see it alone. But when 2, 3, or more deductions happen at the same time, the difference in your monthly check can become serious. That is why you should not ignore a smaller deposit. Do not assume it is permanent. Do not assume it is correct. And do not throw away a letter from Social Security, Medicare, or the IRS without reading it carefully. Some deductions are required by law. Some are based on income. Some may be temporary. And in certain situations, you may have the right to ask questions, request a review, file an appeal, change tax withholding, or submit updated information. Your job is not to become an expert in every rule. Your job is to notice the change and contact the right official office before the problem grows. This week, take out your Social Security payment record or check your bank deposit. Write down the exact amount you receive. Then compare it with your benefit information and look for any deduction you do not understand. If you see Medicare premiums, ask whether the amount is correct for your current situation. If you see federal tax withholding, ask whether the amount still makes sense for your current income. If you receive an overpayment notice, do not ignore the deadline. Read the letter and contact Social Security right away to learn about your options. And if you are unsure about any deduction, use the official contact information from the Social Security Administration, Medicare, or the IRS. Do not trust unexpected callers, texts, or emails asking for your personal information. You work too hard to let confusion quietly reduce the money you depend on every month. If this video helped you, send it to one person over 60 who receives Social Security. It may be a parent, spouse, neighbor, friend, or family member who has never checked why their deposit is smaller than expected. And for more clear updates about Social Security, Medicare, retirement money, IRS rules, and benefits for U.S. seniors, subscribe to Robert Preston Updates and turn on notifications. Thank you for watching. Protect your money, read every notice, and I will see you in the next video.